Unfortunately, it's another disappointing and slightly discouraging update on the consumer. Consumer sentiment in the month of April retraced a couple of percentage points back to 82.4. Remember that 100 is the gain line for this measure. Over 100 means optimists outnumber pessimists, so we're deeply in pessimistic territory. That 82.4, it was a little bit discouraging because the previous couple of months we had seen some hints of the start of a recovery in sentiment, but now we've sort of been knocked right back. That 82.4 is in line with the average that we've seen over the last 2 years now, this deep and protracted consumer sentiment slump. There were some slight positives in the detail. The forward view around family finances is improving a little bit. The prospect of July tax cuts, clearly positive there. And responses around the labour market are still pretty comfortable. People are quite comfortable about job security, and job prospects, if anything, have improved slightly over the last few months. But the pressures on cost of living, sharply higher interest rates and increased tax payments are still bearing down very heavily here and now. And very discouraging in terms of attitudes towards whether now is a good time to buy a major household item. Going forward, we are expecting some gradual improvement on this front. It seems that consumers are still very lack confidence in prospects of further policy support. 40% still expect interest rates to move higher over the next 12 months. Only one in five expect rates to move lower over the next 12 months. So for Australia, the inflation fight has been a little bit longer and harder than other countries. If we look at comparable measures overseas in the US, the UK and Europe, for example, on a like-for-like basis, they're consistent with sentiment reads in the 90 to 95 range compared to Australia's low 80s. And there the inflation story is a little bit more advanced, and the Federal Reserve in particular has opened the door to potential rate cuts. We haven't really had the same sort of messaging yet in Australia. The next few months we may get some shift around that. The next update on inflation, we think we'll see a more decisive move of headline inflation down to around 3.5%, a firm 3 handle for a change compared to 4s. And that should allow the RBA to voice a little bit more confidence around the outlook for inflation, perhaps be more sort of clearer that further rate hikes are not likely, perhaps even open the door for rate cuts, although we think they'll be pretty cautious around that. We'll also have the May budget, which should offer some more cost of living support measures, and then July we'll have the tax cuts coming into effect. So there still looks to be a reasonable prospect of a recovery forming in the next few months for sentiment, but right here, right now, we're still stuck at the bottom of the cycle. Confidence is still very downbeat, and to the extent that there's light at the end of the tunnel for consumers, it still looks to be a little way off.